Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
So don't stop me now. Don't stop me, 'cause I'm having a good time, having a good time. Shooting star leaping through the sky like a tiger.
Good morning, everybody. Welcome to Snipers Live Trading. It was nice to hear Queen come bring us in here, Gerardo. Thank you for that great song. I just saw Bohemian Rhapsody like last week again for the fourth time. I just love that movie. Well, good morning, everybody. How are you? How are you? How are you? You ready for a new week?
Betcha.
Yeah, me too. So we're gonna keep you muted at least for the beginning of this. And if you have any stocks, let's start having you as a community contribute stocks. If you have any great sniper candidates that you're looking at yourself, please feel free to type those in the question box and we'll come back to them. So let's take a look at what you're looking at as well. Now, what I'm going to do to start, as I always do, is to just take a look at the markets, Am I muted? What happened there, Gerardo? Can you hear me?
Yeah.
Okay. I thought I might have been muted there. So, all right. So you can hear me. Let's keep going. Regional banks rebound for a second day as PacWest cuts dividends. Now, we were looking at PacWest last week. Pauline and I were, in particular, we were looking at credit spreads on it. PacW is a regional bank, and man, it tanked. It has suitors for purchase, but last Friday the stock bounced up pretty hard. And look here, everybody, pre-market, it closed at 576 on Friday. Pre-market 770. Taking a quick look at the news here. Now, I wasn't planning on doing anything with this one, but when I start looking at what the stock's doing, I want to take a look and see if there's any news behind it. I'm just going to take a quick look here. I know that PacWest, we all know it was in trouble, but it's bouncing. So we can dig into this news here. And lots of volume, lots of suitors coming in. This could be a really good thing for us to look at for a put credit spread to open. So that goes on my list. This is how you can find these stocks, everybody. Just go through the news as a sniper, like an attorney that's, the ambulance chasing attorneys that we have in the States. They look for tickets and accidents, and then they reach out and say, hey, can I get you out of that ticket? I've been contacted many times for that one in particular. And it's similar where we're looking for big moves on big news, technically interesting. And then we come in and we swoop in and we collect high probability profits. So I want to look at that one at the open this morning. And one thing that we've discovered over time, or I've revealed, is that in the morning with such a big pop up from 576 to 750, it's at a 2-point move on a $5 stock, that's at least what, a 30% move. The stock's going to be way up here to open right above 750. Now the IV will be elevated at the beginning, so it behooves us, in order to get more credit and conceivably put our credit spread further away, is that IV will make that more possible. So we want to capture that in the first part of the morning. And let me tell you, I wasn't planning on doing this. I just found it. And this is how you can find these sniper candidates. When you look at our probabilities and what we've done with these credits, we've had 1 out of 20 plus winners, 1 loser out of 20 plus winners, 95% APL. 95% win rate in an APL, about 14%. I mean, if you can keep doing that, that dog will hunt, as they say in the South. My daddy was from North Carolina, Salisbury, North Carolina. So I've got some Southern blood in my body. Just looking through here, I didn't see a whole lot when I took a quick look this morning. This is another place to look. Stocks making biggest pre-market moves. Berkshire Hathaway, AMC. I'm going to look at AMC. Berkshire, I don't really trade very often, but we can look at Actually, let's go into the news here. Let's see. Let's hit the link here. And you can see a lot of really cool opportunities for us. The regional bank popped up for PacWest in pre-market, adding to nearly 82% gain on Friday. They said their business is fundamentally sound, cut its dividend by 1%. Western Alliance and Zions also bounced, so we could look at those perhaps as well. Maybe regional banks are bottoming out. We are in the midst of earnings season. We're just writing some of these down. Western Alliance, and then we also have Zions. I kind of want to do that one because it's my dog's name. Let me look at Zions here pre-market. What's Zions doing? I guess we're playing banks. I guess we're playing banks to start. So Zions Bank Corp has bounced as well on Friday. And right now, as I speak, the stock price is at 25.60, having closed at 23.76 on Friday. So the stock's right up in here. Maybe we can come down and sell some put spreads around 20 on Zions. Now we have two of them. I'm not going to do Zions and PacW, but we'll do one of them. It looks like we bottomed out. And that's actually, funny enough, the topic of discussion for today is finding these bottoming stocks and selling credit spreads underneath. Bottom feeding, in other words. So we're going to do some of that in a bit as well. We got two candidates already. Let's look at AMC as well. AMC's, strong support at 4, just kind of going nowhere, sideways. Pre-market, the stock's at 570. It's down a slight bit. I would like this maybe more as a iron condor on AMC. It is a meme stock. It can have moves, dramatic moves up if the Reddit Wall Street Bets community starts getting I almost said a bad word, gets attracted to AMC and creates a bunch of retail buying. You don't want to be on the wrong side of that bullish move if it does happen. All right, so there's some basic news there. Let's take a look at what's going on on the economic.
Hey, Mike.
Yeah.
Daniel is also suggesting Oxy sell puts or put spreads.
You said sell puts instead of put spreads?
Sell puts or put spreads.
Yeah, for sure. Yeah, for sure. You can, if you're a stock trader, this strategy can be used to just sell puts and collect stocks on a discount. We're going to cover all of that here in a few minutes with this bottom feeding system. So yeah, thanks Daniel for that. That's a great comment. Thank you very much. So here's what's on list today. We have Chicago Fed President Goolsbee on television. So we got some regional Fed governors on speaking. So that can always move the market. The big news for this week though is we have the CPI and the PPI coming out on Wednesday and Thursday. These are the Mac Daddy inflationary indicators. Of course, we want to see inflation reducing because it's so high. It is reducing. So hopefully that trend will continue. But if it doesn't, surprise news can happen. If the inflation starts lifting, we could see a contraction in the market or drop in the market and vice versa. If inflation really contracts more than expected, we could see a solid bullish run up in the market. So that's what's on store Wednesday and Thursday, potential market moving news there. And then Friday, not much really going on. So that's really the main economic calendar for the week of the CPI and the PPI. They're coming out Wednesday and Thursday. So keep an eye on that. Be ready. If you're trading directionally, be on the lookout and watch. These reports come out at 8:30 and you'll see the market react in a particular way. And that's likely where it'll keep going for a little bit. Could be benign too. Maybe we don't see any movement from these reports. I was looking at sectors as well. One of these tools I like, it's free, sectorspider.com. And then when you get here, you go to tools, and then you can go after sector tracker and look at the different sectors over different time frames. So this is let's go to a one month view. And over the last month, energy has been taking it on the chin. This is right after, remember about a month ago, oil gapped up 8% on an OPEC cut. And now oil has returned from whence it came. So energy has been under pressure. Here's a 5-day view. Energy under one of the weakest performing sectors over the month and over 5 days, which is a week of calendar days. And then now energy has popped. So energy bounced on Friday. And then so that leads us to this. Well, what's the XLE looking like? XLE. All right. Got a little bounce there. Certainly that's a bounce. Energy closed, XLE closed at 80 on Friday. It's now at 81.49. So the stock will open up here. So it looks like a nice little bounce. Potential selling a credit spread right underneath this bounce could be something we look at as well. I'll write that one down. There's so many candidates, so many trades. Always that's the case in trading, especially if you're trading options. Now here's a USO chart. Maybe this is more interesting. All right, I think it is. So we've had, this is the OPEC cut, and then the prices fell nonetheless. We've hit 60, nice little bounce there, big volume sell-off, nice recovery. Friday's action had, let's zoom in here. Friday's action, we had a bounce right up around 63, and today we are slated to open right up here. So I like this one as potential selling a put spread underneath here. Maybe USO put spread at 60. PACW is the one I want to try to get right as the market opens. We have what, 19 minutes. So I'm going to have us prepared to snipe some IV on PACW. It was on the, one of the few stocks listed on CNBC, you know? So guess what? People are going to come in this morning like a feeding frenzy, buying and selling options on PACW, maybe even USO as well. So we'll look at those two here in just a few minutes. All right. What else do I want to show you? Well, earnings is still, I was just thinking to myself, how are we doing on earnings? Well, there's still a boatload of them coming out. We're still in the midst of earnings. We're going to see earnings, a lot of them this week. So keep an eye on those. You know, you don't want to be on the wrong side of a credit spread if a stock gaps. So be careful selling credit spreads into an earnings announcement. Let's kind of get a feel for when earnings cools off. I'm going to go forward a week at a time. By the way, this site is finance.yahoo.com/calendar/earnings. And I like this site because it gives us a listing of how many companies are announcing earnings. So next week, you can see it's starting to trail off a bit. And then the third week, it gets lighter and lighter. So really we have, this is kind of like the last hurrah of earnings. This is going to be the biggest earnings week we have for the rest of the month. And then earnings will start trailing off. So be careful selling credit spreads into an earnings announcement. It's just generally something you don't want to do. All right, let's go take a look at our portfolio performance. And then we're going to take a look at, well, actually, let's look at the markets first. Sorry about that, Gerardo. I'm going to take a look at all the future symbols. Gerardo?
Yeah, Phil was talking about Shake Shack stock. Sell some puts there, put spreads.
Yeah, let's take a look. Thank you, man. Thanks, Phil. Isn't it SHAK? Yeah. Oh, yeah. Yum. I like Shake Shack. I've never eaten there, but I heard the food's good. If you like burgers. Look, this was at post earnings on Thursday. The stock obviously had good earnings. And then we've had two days. Look at the volume here on this day. Yeah, this is a really nice bullish candidate, Phil. Thanks for sharing it with us. Power of a mastermind community. We can't, not one person can look at all things. And just looking here, big bounce. Just checking the news, that was 5.4. And we can dig in and we can be well assured that earnings were awesome. And then a bunch of price upgrades, buy rating, market perform rating. So lots of price target lifts, and Oppenheimer says outperform. So the analysts are loving it. And so what we could do here is come in and sell maybe a put spread. I would say no closer than 60. Why 60? Well, that's resistance. And you can see here, this 60 resistance level was breached way back on February the 2nd of this year. And then the stock fell back and went sideways. And then this 60 level was breached with enthusiasm on what, 4 or 5 times average volume. So when you see that, and then another high set, and then as I speak, 65, we're now right below 65, which will be resistance on this bad boy. But 60 looks like a good level. Big run up, second big run up on really what, 3 times normal volume. Today we're taking a bit of break as the stock wrestles with 65 resistance. So we'll come in and take a look at this one on the open. I actually like that one better, Phil, than the PACW one. We're going to look at both. We're going to be busy here about 15 minutes. So let me just take you through our portfolio, and then I'll get right in. I'll go into Thinkorswim. I'll stay in Thinkorswim, and then we're going to position ourselves to snipe some profits on PACW and Shake Shack. Our IWM credit spread that we put on the 28th was a winner chicken dinner. Man, we sold this credit spread. I mean, you know what? Sometimes this feels like, is there a camera? Is there a camera behind me? How is it possible that I could generate this kind of probability of profit in just a handful of days? So we got into this trade on 428 in the IWM, the stock we sold. I'll show you where we sold. We sold right here. As the stock was setting lower lows, we sold right here. Mega strong resistance levels to keep us safe. And that's indeed what happened. The stock made a run and then fell back away. And we sniped our little $45 of profit in just a handful of days. So that's a winner. Just another one. I feel a little weird when I look at these because I've never in my entire 25 years of life seen so many winners. Here's another one. This is an iron condor we put on the TLT and we surrounded it. You know, we had the upper resistance level corresponding with the upper break even. And then we had the lower break even corresponding to super strong support. And we let the stock do what the stock did. And this whole thing would have expired worthless had you left it. And you can do that. I think on these short-term credit spreads, it's fine to hold to expiration, especially if you're getting small credits. And let's let the whole thing expire. Save yourself having to buy back for a small debit, a penny or two. So save money there and then save money on commissions. Just let the whole thing expire. And that's what we could have done in this case for an 11% profit in about a week or so, week or 2 weeks. So then we have our UNG credit spread. Now this is it's a long-term credit spread we placed on UNG. The idea here was UNG isn't gonna drop too much farther. If it does, then we could very well end up taking stock on this one for a cost basis of 590. So if what you do is you take the credit strike price, subtract from it the credit, I should say the strike price of the short put, take the credit away from the strike price, and that's your cost basis. So it's like getting the stock at a discount. You could own the UNG at 590 and then wait for the inevitable, which will be, it will rise. It will rise. It's natural gas. It's a resource that humans use and they won't stop. And so you can reasonably expect there to be a little bounce on UNG and just own it and wait for the stock to rebound over time. So it's really low right now. It hasn't been this low in a long time. And it's a good place to consider buying stock. So that's another approach to credit spreads. Sell credit spreads or even naked puts, as I forgot who mentioned it earlier, but you could sell puts on a stock you wouldn't mind owning and then make money, make the credit with a high probability of profit. So that's another approach that we've used in the past. All right, let me go back to the market analysis. I know I'm bouncing around, Gerardo. Sorry about that. You're busy trying to do all these timestamps and Mike is all over the map here. Let's look. 4,200 resistance. Yeah, you got to use that. We had a nice bounce on Friday. We're slightly up like 0.09%. We have essentially a flat open. We have mega resistance up here at 4,200. And we have very strong support right at the 200-day average, or you could even say 40.75, 40.50, 4,050. There it is there, super strong support there. So I would expect this thing to channel until something happens this week. We've still got earnings, a lot of earnings coming out this week. We get good earnings. Remember what happened to Apple last week? So Apple, that's another stock I think is a good credit spread candidate as well as Apple. You know, Apple is a tech stock, of course. It's highly represented. It's a stock that really informs the performance of the NASDAQ, which is the Ford NQ. And you can see the NASDAQ looks like it wants to pop. It's got 13,400 resistance here, maybe a bit lower as well. But, you know, before I'd have a further bullish prognosis on tech, I'd want to see the stock above 13,400, or the NASDAQ, I should say, above 13,400. All right, so the markets are still bouncing up against resistance, trying to figure out where the heck they want to go. And what are we going to do? We're just going to wait and see where they go. And then we'll react accordingly, detach and react. That's a saying I like. I use it a lot. Let's just let our rules tell us what to do. Here's the Russell 2000, same pattern. I still like a bear call spread on this one. If you like that trade from last time, you know, consider a bearish credit spread on the IWM above the 200-day average. There's another trade you could be playing with as well. You know, let's keep doing it. It works. Death cross. Whoop. That's bearish, self-fulfilling bearish trigger. A lot of traders say, all right, we're bearish on the Russell 2000 stocks now that there's a bearish cross. And indeed, the stock just doesn't seem to interested at all in crossing back up above 180. And certainly the 200 is a little higher than that, selling a bear call spread on IWM at 181. 1 to 2 week options, sell the 181 by, I'm writing it down. I might even build this for you as well. God, there's so many trades for us to look at today. All right, so that's the IWM. Let's take a look at oil. Oil's, oh, okay, now. So many options, so many options. So here's oil /CL. Look at that gorgeous pattern there. That's a hammer pattern with a very, very long tail. Let's zoom in a little bit. Bouncing off of 65 support right about there. And it actually breached it, went down to 63, but that's a beautiful pattern. And when coupled with above average volume, tends like a slingshot. Imagine a slingshot. Here's you pull back the what is it called? The cable, the stretchy bit. You pull it back, you pull it back, you pull it back, you pull it back, you let it go, push. And then that creates a momentum, which has popped the stock up. And as we speak, the IWM is pretty flat, as we would expect. Man, come on in and sell a 65 put credit spread on oil. Let's take the USO. That's the stock we could look at. I'm giving you ideas. I can't do them all. You know what to do with selling your credit spread strikes. So USO, we could sell based on that technical pattern. We could sell underneath here at 60, maybe 58. We'd sell the 60 put, buy the 59 put right underneath that bounce, or maybe even lower, and capture a bit more. In fact, let me build that one. God, there's so many trades. What do I want to do? I want PACW at the open. Shake Shack, don't have to do that one at the open. USO perhaps at the open. Just see my list. It's growing as I speak. So let's go after USO as well with a put credit spread. Okay, PACW. Oh, sorry, I've been up since 5 and my brain isn't quite online yet. So stay with me. I've lost the plot a bit, but I'm going to get back on it. Here's gold. Gold is threatening. It wants to break higher, but gold is really controlled most of the time by the US dollar. So here's that overlay chart I like to do. This here, risk off. All right, so the inverse relationship was intact. It's mainly intact most of the time. Here, the US dollar came down a tiny bit and gold lifted. Potential risk off. And then gold dropped on the US dollar dropping. All right, now that's normally what you'll see there is the gold moving in the opposite. Here it did. So eventually, by the end of the day, the US dollar got weaker, opened higher, got weaker, gold opened lower, got stronger. So the inverse relationship is still intact. I don't see solid risk off here, but if we did, then we can go back to the SPY chart or any of the market indices. And the SPY is one that we like to use. And we could say, well, you know, this resistance level at 415 is more likely to hold if there's risk off. So those are the kind of things we can do with this intermarket analysis to hedge our directional bets. Here's bonds sideways, just going sideways, not much going on. Bonds drop in a lifting in interest rate environment. That's what we got just last week. Bonds have dropped in response. But here, if you start seeing bonds begin to make a strong run, then that would also be evidence of potential risk off. Don't see it though, not today, not today. All right, we've got 4 minutes. Let's go get some PACW. We got to check the slippage. Pauline and I were looking at this last week on the snipers board, and the slippage was gargantuan. It's not too bad today, actually. Oh, that's good. That's real good. So I'm just looking at slippage, 45 by 50 for the 8s, the 5s. And these are options that expire on Friday. So I'm looking at sniping a 1 week profit. When you look at this option chain, here's something to know about options. If there's big news, like there is on PACW, then the IV will be higher in the shorter months and drop as you go week to week or expiration to expiration. The IV will be higher in the Friday options than the IV is on the next Friday options. So what that means is sometimes, and particularly in the first few minutes of the day, you can come in and snipe some high expensive options. And that's what I want to try to do here on the open. So let's go back to PACW. The stock will open at 750 something, 750. It's going to open right about here. So how low do I want to go? I would like to go to 250, please. But is there any money? We'll find out in about 3 minutes. So let's zoom in a little bit. Now again, the stock will open right about where my pointer is. And so then the game now is, how low should we sell? Well, I would say the best place to sell would be right around here at 250 or so. See the low here, 248? You know, so that was a multi-year low, and the stock has bounced enthusiastically above it. So maybe that would be a great place to sell if we can get enough credit. So that's where I'll start to look here in a couple of minutes. So I'm looking right at the open here. This is Friday's close. I need more strikes. I think we're going to be able to get something here. Wow. So the 250 strikes on Friday's pricing were around 35 cents. The twos beneath, you probably get about 10 cents for that. 50 cents, 40 cents of max risk, which is a 25% profit. I think we're going to have a good shot at grabbing a 250 call spread or put spread, excuse me. So what I'll do here is I'm going to go back to vertical, take it to vertical, and I want to sell at 250. And I'm going to have this ready. Now, this was the price as of Friday. We may not get, not much of a chance we're going to get 10 cents, but we can be ready. All right, now I'm going to be ready without even using Tom's tools. I'll retrofit Tom's tools in here in just a minute. I'll build the risk graph in just a minute, but I really want to capture this credit. Now, here's how you figure it out. The max risk. So there's 50 cents in the spread. That's the max value of the spread. So if I sell it for 10 cents and I have to buy it back for 50 cents, my risk is 40 cents. So the risk in this 50-cent spread is the width of the spread minus the credit. So I now know that per contract, my risk is $40 total. All right, so if I did 11 here, my max risk, I could actually do 12. If I did 12, then my max risk would be 12 times $40, which would be what, 48. $440. Is it $480? 480. Okay. Now I'm just gonna throw it out there right now. I'll take it if you can give it to me. So I'm gonna put it in there as the market's open. And we're gonna see, I'll come back here again. Let's do a cancel replace. So it's sitting there like a trap. We got a line in the water. I don't know if they're gonna give us 10 cents. They might on the open. And then I'll cancel replace and be ready to
Mike, do you have that as a debit or a credit?
Oh, I have it as a, thank you for that. Yeah, I pressed the wrong button. Let me flip it around. Cancel replace. Okay, I'm gonna cancel this. Thanks for catching that. It's only at 2.5 cents anyway, now 5 cents. So let's cancel replace this. Let's just cancel it and I'll start over. Oh, you might be able to get 5 cents, which would be 5 cents divided by 45, 11%. 11% profit by Friday with super duper high probability of making it. So let's try it again. You know, I tell you what, I sometimes get excited. So now my risk is 45. So I could do 11 contracts at 5 cents. I'll take that. What's 5 cents divided by 45 cents is 11% by Friday. Will you give me 5 cents here? Let's try for it. The natural is 0. We may not get it, but it's possible. So I'm going to let that sit for just a minute. Possibly that we're going to get it. What the thing is, we probably won't get it. The chances are smaller because the natural price is actually a debit. So we're a little too far away, it looks like. So now what I'll do is lift it up, the upper stripe to 3. You can also see the prices here. I could sell the 250. See, they're not giving us anything for these credits down below. When you see a debit there, we might be able to get 5 cents. Nope, showing 0. Already the prices are drying up. So now we tried, we didn't get it. Now we can come in and find another price. What about $4 here? A $4 short strike. A nice bounce off 4 here yesterday. 2 bounces, 2 big moves off of 4. And still high probability that the stock will remain above 4. So let's try 4. What can we get there? Yeah, the bid price is there. The bid price of 5. Let's try for 10 cents on this 4 spread. So I'm lifting it up. Less probability, but we want to make some money. So if we get it for 10 cents, our risk is 40. I could do 12 of those, selling the 4. Buying the 350, confirm and send. We're in a feeding frenzy here, man. We're trying to grab some of these expensive options on the market open.
Carla got the other one for 5 cents.
He got which one?
The previous one, the 252.
Oh, really?
Yep.
Oh, that's awesome. So he sold the 252 and got 5 cents. Excellent.
She, Mike, she, Carla.
Oh, Carla, I'm sorry, Carla. I didn't understand the name. Congrats.
Thank you.
Trade. I like.
Yeah.
I like.
Keep our fingers crossed.
Yeah. Let's build Carla's trade. So now that you're filled in Tom's tools, what you do is you go to trades, edit, create. I know what Carla just sold. She was on Pack W. And we'll track this one on behalf of Carla. What's that?
I was going to say 17 cents and 12 cents.
Okay, thank you. So you sold?
I did the 2.5.
Yep, you sold the 2.5, May 5s. Actually not May 5s, May 12s. Sold the 2.5s. Carla, wait till you see the risk graph.
Can't wait. I'm going to build it myself right now.
I could always send you the link as well. And how many contracts did you do?
I did 11.
All right. Anybody else get it? What were your fill prices, Carla?
17 and 12.
All right.
I got it earlier. At 8:31, I got 14 cents on the 2.5 too.
Holy moly.
What?
I asked for 10 and they gave me 14.
Oh my God.
Congratulations.
Yeah.
This means you have to have them ready to go when the bell rings.
Correct. Gerardo,
Yep.
can you say correct?
Correct.
That's it. That's it. I just got filled for 10 cents on the 350. I also got 5 cents on the 252. Carla, how much did you get?
I
Carla?
get 5 cents
You got 5
cent
cents.
credit.
All right, so this is what Carla got. I got it as well. I'm gonna save this in our sniper trades. And Carla, we're not gonna see the probability of profit right away. We have to wait till 10 o'clock. But even without, now this 88.5% probability of profit by Friday exists when the stock is at, 576. And right now the stock is a hell of a lot higher than that at the moment. It's at 8, almost 8, 7.5. So your probability of profit is darn near 100% by Friday. Boom.
Woo. And then Andrew got the 4-3 for 10 cents.
Lovely. Lovely, lovely. Let me post this. So it's good that you guys tried different trades, different strikes. I really this is a great trade. We're going to make money on this one most likely, unless some really crazy stuff happens by Friday, which is possible. But this is the kind of these are the kind of profits that are available to all of us by just getting up a little bit early, half an hour before the markets, just do the kind of analysis I've shared with you, and you can find these high probability profits. I mean, imagine if you were able to make, what's our return on investment on that one? It's a 11% a week, 10% if you buy them back for a few pennies. Man, that's a lot of return per month if you can snipe these in this fashion. So I'm going to go ahead and populate this trade. This is the one I'll track. I'm going to populate this trade in the snipers WhatsApp. Now this is available to anybody who is subscribed to any MWTC product. It's if you're not a subscriber to a paid product, you don't get this. So this is a premium feature. And what we do here is we post these trades right here live, so you can actually do them yourself. And then what I'll do later is I'll take this trade and I'm going to populate it in our forum. You can access the forum, mwtradecoach.com. You log in. Oh, there we go. Let me get through my security. And then I'll post this in the forum. And so if you go to our forum, members, this is for everybody, whether you're a subscriber to paid product or not, but you go to the forum and then over to snipers, and then I'll post this risk graph right over here under snipers, click snipers. Every trade that we've talked about and done is listed here. If you go to the posting for the trade, you'll also be able to pull up the risk graph. This was from last week, the IWM trade that we profited on this week. All right, so there's a lot. Shake Shack was another. I can't help it, man. This is fun. This is like a best form of adult entertainment. That's clean anyway. All right, let's go to trade and see Shake Shack. Where do I want to go? Well, maybe 60. I'd like 57.50 better, please. So I want to sell here. That would be ideal for the highest probability. Or you could step a little closer to the heat to 60. I'd go no further than that. Now the stock is seems like it wants to stay above 65, which is a round number and a good resistance level. Now support with 2 closes above, if that happens today. So 60 feels better than it did after today's action. So then the same thing, we come in and we look at our credit spreads. What can I get for 57.50 on this? Let's find it. 57.50. Yeah, I can already tell here. These are options that expire Friday. The 57.50, the mid price here is 0. You can see that, right? Negative 15 by 15. If you sold this credit spread, you would get 0. So there's no credit there. If I went all the way to 60, there'll be about 5 cents. You could do, no, there's no credit there. All right, so what I got to do then is go to the next month or next expiration, next Friday, and then I can start looking again. Doesn't look like they want to give us any premium down here. We could sell the 57.50, maybe 5 cents. Nope. What about 60? 5 cents credit. You could do a 60.59 credit spread for maybe 5 cents, but it's dried up. There's not a lot of juice here. The natural price is a debit. So sell a credit spread for a debit? No, I'm not doing that. Maybe you'll get 5 cents on that one. And that would be selling this, what is it, May 19th? That's a 2-week trade. You get 11% over about the same number of actual days left as of today. That would be a decent trade. Let me see if we can get it here for 5 cents. So, no, not at all. No, it's not good, because now we're dealing with a dollar point spread. So we get 5 cents and our risk would be 95. That's 5% by this time next week at 60 or higher. So that one, we kind of missed it. I think if we'd gone after it in the first part of the morning, Phil, we probably would have gotten it. There's so much value in grabbing the first 10, 15 minutes of the day, first 5 minutes, really. Have the trade in, put your, like we did with PAC-W, just stick it in there and see if you can grab a fish. You know, it's kind of like, I've heard, I've never done this, but I've heard that if you drop an empty hook in a school of fish in a feeding frenzy, you have a good shot at catching one even without bait. And it's kind of like, that's how it feels to me if we can grab the first part of the market open. All right. Now I listed a bunch of other ones. USO is a good one as well. So I like USO, a put credit spread on USO. I do. Maybe it's 60. See here? Nice bounce off of 60 support, maybe 58 if we can get it. Same process. So let's look for a 1-week trade. The closest I would get would be 60 in this case. So I want to look at selling the 60 puts for Friday, buying the underlying, of course. Nope, showing a debit. Slippage is a little wonky at the moment. So we'll have to maybe let that settle. What if we went further out and sold 60? This one's more interesting. This is selling the May 19 60 puts at 60 and buying the 59s. So that's going to give you 8 cents on a risk of, guess what, 92. So what's that, 9% over 11 days? Reasonable, not super exciting, but super high probability of profit. Okay, so that's the process. If you find any you like, then please feel free to, I'd like you to perhaps put them in the WhatsApp feed or on the sniper board and share your fish with other people. It would be always a good thing to do. All right,
Andrew,
now go ahead.
Andrew got IWM for May 19 for 15 cents credit. 182, 183, call credit.
Okay, let's build it. Gerardo, what are the strikes again? The
182,
expiration?
183.
What expiration?
May 19.
May 19. All right, this is a longer term trade. May 19 is 11 days. And 182, 183.
Correct.
Okay. There's actually a 182, 182.50 that would give you 7 cents on a 43 cents risk, which is what, 15%. Now notice here, if I do the 182, 181 and widen it. Oh, I'm going in the wrong direction. Sorry. I changed the wrong one here. We're going to sell the 181. And what we could do as well, let me start over. I've lost it. Here we go. You can sell the 182 call, buy the 182.50, 7 cents. All right. Now, if you go higher and buy the 180, what was it again? Was it 182, 183 for Andrew?
Correct.
Okay, so if you go wider, 183, you get 12 cents. 12 cents is higher than 5 cents or 13 cents now.
But he got 15.
You got 15 cents. I like it. That's higher. So we can, right now it's only worth 12, but that's a good one as well. Even at that price, let me give this to all of you. And Andrew got 15 cents on his. I'll put 15 in here, actually. Yeah, probability of profit on that one is real nice. How you like
Andrew
it?
say,
Yeah, go ahead.
Andrew say he wanted the extra strike in between so he can collapse the risk if the market jumps up.
bud. Oh, that's great. I love it.
And then George is talking about WTI. He says up $2.
WTI,
Uh-huh.
WTF, this is an oil company. Yeah, good one as well. I wouldn't do oil, USO and this one, George, but if you like the stock better, then you can sell a 4 put here. I like, now this is a stock and it just had earnings. When was the earnings? 5/9. No, earnings is coming up. Don't do this one. You got to check earnings. You got to check earnings. Earnings is coming up on the 9th. All right. Do not sell a credit spread into earnings. You don't want to do it. You just don't want to do it. The stock could gap down after earnings and that credit spread would be a loser. And while you're waiting for the 9th to happen, which is tomorrow, the IV will elevate from today and tomorrow to the close. And you'll see the IV rush will work against your credit spread. So you got to be careful. All right, let's get to the lesson for today. I want to talk, and this actually came from a conversation that I had with Johnny, Dr. John. And I used to do this. I used to be a naked put seller when I first started trading. And I actually did this strategy when I decided to try credit spreads again after losing $500,000 in 2000, doing them naked. Well, it was a naked trade. I wasn't, except for a couple of times. But these naked puts killed me when the markets corrected. And then I started looking for ways to come back in. And this is something that I used to do in the past. And I thought I would share this with you. And so the whole idea here is to find stocks that have bottomed out. And when you find a stock that maybe has hit an annual low and then has had a big pop up, those stocks are oftentimes good candidates for bottom fishing, finding the bottom. Stock's been in a depressed state like this one on Capital One. This was an annual low here. And then what happened on Friday was the stock bounced. So this is a way to detect stocks that have really been under a lot of pressure, have hit bottom and have bounced. So we need to look for that bounce. Let me take you through a process that will, and John, I covered this with you already, but this is the idea. We're going to look for stocks. I should change this to low. We're going to look for lows. Let me make that red. So it's really clear. We're going to look for stocks using the high-low ranker that are at annual lows. And that's what we're going to use. And then we're going to feed those into put credit spreads. And this credit spread ranker actually can detect if there has been a bounce up. And then we'll end up with a high probability bull put spread. So that is what I want to do right now. And let's go looking for opportunities. So here's what I'm going to do. Stocks, stock analysis, high lows. I'm going to look for stocks for the latest lows, the lowest close over the last 52 weeks. Here, I go after all optionables. I'll do my own slippage mitigation. Do a search. And you can take a lot of these. Look at this. This is also kind of like a leading indicator. So all of these, if there's 100 in this column, it means that this stock on Friday set an annual low. And look how many hundreds there are. What? 44 stocks on Friday set annual lows. Is that a leading indicator for the market? Maybe, but certainly 44 stocks, and there's thousands of them, of course, is not a huge number, but it is higher than normal. And then you look at the others here, and a lot of them are within a wisp, a few fractions of percentage points near annual lows. So what I'm going to do here, these are good candidates. I'm just going to save the top I don't know, 300 into my stock list, click replace. And now what I'll do is go to searchers, single strategy, and select put credit spreads. All right, now we're bottom fishing now. So let's go through a couple of settings here. Now I could look for short term. If we did short term, we're going to make more money. And if there is indeed a bounce, we can make a good little bit of money in a short amount of time. You could also use long term if you like as well. If you do long term, the short strike will be even further below where the stock is. And if you do have an intention to buy the stock, then you can get yourself at a really low cost basis, like bargain basement prices for a stock. Now I'm going to go short term in this case. So notice here, keep your eye right here. All right, when you go to default, here's what when you're in bull puts, bull put credits, put credit spreads, it's called there. Then if you select default short term, it's going to look for stocks that went up the prior day on Friday in this case. So it automatically detects the bounce. And so I'm also, the other setting to change here is I would be very happy to sell a 50-cent naked put if there's anything there. Now that stock is kind of a low price stock, but I don't want to limit myself to the downside. So I'm going to make the minimum strike, the minimum points be 1. So we could be doing these on $1 stocks. In other words, I'd be happy to do that in some cases, depending upon the health of the company. So you can change max reward to risk ratio. You can make that more like 15 if you like, drop it a bit. We're looking for 4 to 30-day options. That's perfect. And then I select my stock list. And then we hit search. And let's see what comes up on the board. Now, here they are. These are the ones that have come up for us. Love. Let's hit pick 3. Love bounced on, see, Love is at near a 52-week low. That's the 52-week low there. There's our bounce, but I don't really love that bounce. It's an inside day. And I would rather see a bounce above the high here. Don't see it. It's not a really enthusiastic bounce. And then looking at the stock as I speak, what's it doing? Yeah, Southwest just, it doesn't look like it really wants to bounce. I see strong support at 29, but I'm not super excited about that bounce right there. Small bounce within the big bearish body. So we'll skip that one. Although potentially a good trade. Here's GitLab. So there you go. That's kind of what we want to see. Again, I'm not seeing a super enthusiastic bounce. We're still within the body of Thursday's action. So let's take a look at GTLB. Yeah, a little follow through on the bounce. The stock has now bounced way up here. Maybe 26. Let's check our news. GitLab. 52-week lows, shares brightest. Okay, this is a tech company. So this stock is trading higher in sympathy with Apple. At least that's what the speculation is, but certainly a good little bounce there. You know what? I can't remember what GitLab does. So here's what I'll do next. Use Google. What does, I used to know, but I forgot. I don't really care. But in this case, because we're going to come in and be aggressive, I want to figure out what the company does. You got to be careful because the stocks are down at these low prices for reasons, you know, so you got to be careful and make sure that there's some good news behind the bounce before you come in and step in front of a train and stock could continue to drop further. So GitLab is an open source code repository and collaborative software development platform for large DevOps. So they provide tools for developers, essentially. It's free for individuals. GitLab offers a location for online code storage and capabilities. So it's a development, it supports software development companies. So yeah, I mean, that's good. I'm just not convinced that's a low. And I don't see a lot of news here. I might want to go back, GitLab and Oracle extend strategic partnership. That happened on the 18th. What did the stock do on the 18th? Oh, nothing, just sideways. So that relationship wasn't really well received. Then we get this big down move here that started on the 25th. Just doing a little research here. Oh, here we go. RBC Capital reiterates outperform on GitLab, maintains a 45 price target. That happened on the 4th, which was here, and the stock has bounced since. Now, you got to be careful with these analysts, Andrew. I know how you feel about things going on behind the scenes. And these upgrades can also always happen, especially if the company has some level of interest or portfolio with their clients on a stock. So you got to be careful. They'll say that just to keep the stock from dropping further, in other words. So you got to be a little careful with that. That certainly did have an impact, and this would be a reasonable put credit spread. I wouldn't sell any closer than 26. Checking the volume though. Let's check volume as well. All right, I'm talking myself out of it now. Just follow along. These are the things you want to consider. So as the stock has plummeted, these last 2 days, the volume has elevated greatly. All right, so increased enthusiasm on this bearishness, but look at the bullish enthusiasm, or let's call it institutional conviction is another name for it, or power. So the bounce occurred on less than average conviction or enthusiasm. And today, we don't know what the volume is going to be today, but so I'm not, I don't love it. I think it's okay. If you want to own the stock and sell a put down here, I think it's okay, but I don't love it. I love PACW. I love the USO trade, but I don't love this one. And so when I look through here, I'm not really seeing any really good candidates for today. Now, I did find one earlier, and for some reason it didn't come out of the scanner, Capital One Financial. So here's one that I thought was somewhat interesting at 5:30 this morning. So we got a 14-day bull put spread on Capital One. Let's look at the stock. Capital One's earnings came out. They were good. And then Capital dropped on the fear of regional banks. PacWest has come out and said, hey, we're okay. And PacWest has risen, and so has Capital One. So for me, this makes a bit more sense to hop into, because Capital One had earnings and the stock didn't drop. It dropped after, as PACW and the fear of regional banks kicked in, it dropped Capital One. So it went down in sympathy when its earnings were at least okay about a week or so ago. So I like this one better. Let's look at a live chart on Capital One. Similar pattern, though. Similar pattern. All this enthusiastic selling, high volume selling, and then we get a bounce, and there wasn't a whole lot of volume on that day. So the enthusiasm was lower than I would like it to be. And then today we don't know yet, but big above average correction volume, and then a little bit of a bounce. So I'm not convicted that the stock will bounce. I do like that it's Capital One and that earnings were good, at least okay. Back over here, came down, all the stuff I've said already. So just checking the news here. That's the question. Is Capital One going to bounce or keep dropping? Capital One announces quarterly dividend on the 4th. I do like that hammer pattern. Technically speaking, that's a nice pattern, a follow through, the slingshot pattern. Follow through, more follow through. I think 84 would be a reasonable place to sell a credit spread on Capital One. Let's just do it just for fun. I'm going to go ahead and check what's available. I like 84. I like 84. That's where I won't go any higher than 84. And I'd like to go lower, of course. But 84 would be a nice line in the sand. Technically interesting. The low is 83.93. This was on the 4th, Thursday, and lots of volume on the hammer pattern. 84 is a strong level of support. So let's take a look and see what's there. On Capital One, 84. That's where I want to sell. 84, 83s, maybe 12 cents. This is by Friday. If we can get 12 cents by Friday, what's my risk? 88. 12 divided by 88. What is that? Hey Siri, what's 12 divided by 88? I couldn't hear her. She was in the other room. That's a good credit though. That's a good credit by Friday. I do like this one. Because we have till Friday. Let's see, we've got 12 cents. 12 cents divided by 88, which is the risk. 13.6% by Friday. Are you serious? Yes, I am. Let's do it. So the risk is 88. I could do what, 5? Or yeah, 5. I'll do 5 contracts. And then my risk will be 5 times 88, which is less than 500, I know. 12 cents at a zero natural may not get filled, but it doesn't hurt to put a line in the water. So let's put it out there at 12 cents. I'll drop it to 10 cents. 10 cents is still really good. 10 cents is 11% by Friday. Just doing a little fishing. What will you give me? Had we placed this on the open, we might have gotten filled. We would have potentially gotten filled. So I'm gonna let that sit out there for, let's see, what's the minimum I'll take here? I got it. I got it. I got it for 10 cents. I'll take it. There's Capital One. Using the bottom fishing strategy. We'll post that in the WhatsApp live feed for you right now. And then I'll build the risk graphs for these filled trades, and I will post them in the MWTC forum later today, later this morning. I'll probably do it right now. And then you'll have the risk graphs and you can go after the bottom fishing candidates. All right, that's a wrap for today, everybody. Good to see you. Hi, Larry. You guys are, hey, and Jeff, hey, buddy. Miami Heat, man. All right, everybody. Have a great week. And if you're in earnings, Andrew Taylor is going to be one last time, it looks like, at least for now, leading the earnings live. Matt's not quite ready to come back yet. So we're going to be graced by Andrew's brilliance and capabilities. So thank you, Andrew, for filling in. We really appreciate you in the community. And Dave, of course, and Gerardo. All right, we love you guys. We'll see you soon. Have a great week. Hasta luego.